Good evening. Welcome to the weekend commentary on the markets. I'm Vijay here. I'm not a SEBI registered advisor. If you like the kind of commentary I do, kindly like, share, and subscribe. And now I've started doing some uh, commentary even in Canada, and that has really picked up well. In fact, surprisingly, last week, the one which I did, in fact, went much more, had many more viewers than the English one. So, Kannadigas, thank you very much. Today, also, I have done something on basically, this is about basic finance, which I'm doing in Canada. The market commentary is focused on the stock market per se, both Indian and global. Now, today's title, I have put it as Jiyo. Now, if people who have been following me, they would recall a few months ago, I had mentioned that this markets, the global markets, will be affected by Jiyo, not the Reliance Jio. Here, the Jiyo, the acronym Jiyo is JIYO. So, what does Jiyo stand for? J stands for Japan, I stands for interest rates. I stands for Israel. Uh, J stands for Japan. I stands for Israel. Y stands for Israel. Y stands for yields, and O stands for oil. So I had mentioned some time ago that Geo will affect the way the markets go along. At that point of time, the Japanese yen to the US dollar was trading around 146, 147, and then it went up all the way to 162. In the interim, the Bank of Japan tried to uh, halt the weakness in the yen at 151, 152, even up to 158, 159, but they failed. But they seem to have succeeded what they were trying to do in the original plan when they raised the interest rates. Now, by Japan raising interest rates, the whole globe is now in turmoil. Now, over the weekend, you would have heard of this concept of carry trade. So, carry trade is affected. So, therefore, stock markets are affected. So, let's take the J part, the Japanese carry trade. So, what is carry trade? Carry trade is when large speculators or large fund houses borrow in a cheaper currency and then invest in risk assets. So Japan has had a negative or zero interest rate for a very, very long time, maybe about 20 years plus. So people used to borrow because there is no interest to be paid, excepting for the currency differential, and then they'll invest in risk assets. So people had built up huge positions over time, and as the yen weakened, which means yen which was 120 to the dollar became 140 and finally went up to 162, more and more people should have borrowed. Now, whether they have done it in the last phase, we don't have data as of now, but more and more would have borrowed. And the moment it viciously turned from 162 to 147, then they would have to liquidate because you see, then their arbitrage difference would have gone. So that could be the cause for a global sell off last week, especially last 2 days, and where on Friday, Japan collapsed 6% almost. US caught the cold, and US also, Dow Jones was down by about 1,000 points, close to 1,000 points at one point of time. And then it has recovered a little bit to close about 600 points. So that is definitely a sword hanging on the, it's like the Damocles sword. It's hanging on the head of the capital markets. But one should understand that these were all pre-planned moves of the Bank of Japan, and today, in today's day and world, all the central bankers coordinate their moves. So while US is going towards reducing interest rate, Japan is going towards increasing interest rates. So it will give them a balance. However, in the short term, you will see enormous amount of volatility, and usually the volatility will be in markets where there are a lot of borrowing, which is basically the Western markets, specifically the US markets. So you are seeing this volatility in US markets and, of course, the European markets. Now, that volatility will affect Indian markets. There is no doubt about it. It has affected it in some manner. But luckily for us, This time, the FII investment in India for the last few years, in fact, for the last 9 years, has been decreasing. In fact, it's been negative as far as the secondary market is concerned. So there has been net positive investment in the primary market, but in the secondary market, it is negative for 7 out of 9 years. So that is a saving grace because they're unlikely to be any heavy selling because of the J factor, the carry trade factor. This is what my analysis says. The second one is Israel. Everybody is waiting for the World War III to start from tomorrow morning, 8 o'clock. Why? Because Israel has gone and hit a Hamas leader in Iran last week, and Iran has threatened that they will take action against Israel. And then, therefore, Israel may hit Iran. Iran is a nuclear state. Israel is a nuclear state. So you'll have a nuclear war, and we'll all die next week. We will not even celebrate our Independence Day. So that is what the analysts say. Let us look at what the facts are. Now, 3 months ago, somewhere in April, Israel hit a commander in the IRGC, the Iranian Republican Guard, high-ranking official. They assassinated him. Iran immediately responded, and the markets fell on April 19th, if you recollect, but they bounced back. Now, Iran, whatever one may say, is a very sensible country. No sensible country will go to a nuclear war with another nuclear entity like Israel. So it is not beneficial for Iran to start a nuclear war in the normal course of time. Therefore, in April, they only did some threatening gestures. They bombed a few places and then they withdrew. That is when the Iranian Guard senior commander was assassinated. Now look at what has happened recently. Israel has assassinated a Hamas operative. Hamas is recognized as a terrorist or deemed as a terrorist organization. So it's like almost like US killing Osama bin Laden in Pakistan. So Israel has every right to attack its enemies. Iran is not its enemy. It is Hamas, which is a terrorist organization, which they consider it as their enemy. So if it happened to an Iranian soil, the people who have to ask questions is the Iranian leadership has to ask themselves the question as to how did this happen? How was the security not provided? How enough security was not provided to this gentleman? And you must also know there are two communities, two castes in Muslims, which is Shias and Sunnis. So one of them, this gentleman is from the other community. So much so, Iran did not even bury him in Iran, and they sent the body to Qatar to get buried. So Iran really does not have any say in this. If you really look at it, real politic, as they call it, Iran is not an Iranian citizen. He's not anybody connected to Iran. He's not an ally, really speaking. He only came to be a part of the ceremony where they installed the new president of Iran. Now, if Iran is going to go to war with Israel on this factor, then I'm sure Iranians will question the Iranian leadership as to why are you putting us in misery because a terrorist was killed on our soil. So he is not an ally of ours. He is not an Iranian citizen. Should we really go to war with Israel? So my thinking is that this may lead to some action from Iran, but it's unlikely to be leading to a third world war and us all dying by next weekend. And so you will not have a next weekend commentary. Okay, so I don't think that is going to happen. You must always keep that in perspective. Then you're talking about yields. Now, US yields, 10-year yield, for instance, had gone up to about 4.6. It had gone to 5 when, in October of 2023, when Ellen decided to soften the yields, and the yields fell down to about 4 and odd. And again, it went to 4.6. Again, it has fallen because there is a fear of recession, which means that the bond market will start moving up while the equity markets will be under pressure. Now, yields have gone to about 3.8 in panic on Friday. Now, that is one way good, one way not so good. As I said, if there is a fear of recession, then the bond market will do well. equity markets will be under pressure. However, the words of the chairman of Federal Reserve last week talked of reducing interest rates in the next meeting. So I won't be surprised that if they reduce the interest rates by about 50 basis points in the next meeting. Now people are expecting 25 basis points. I am going on a limb here and talking of a 50 basis points next week. And should there be any further turmoil in the equity markets globally next week, then I think they will reduce interest rates ad hoc between meetings. Otherwise, they should have reduced it in the next, not week meeting, next meeting, which is in September. So instead of September, they may reduce it ad hoc if there is a further chaos. If there is no chaos, almost certainly, not almost certainly, I mean, they have said that they will reduce the interest rates in the September meeting. The markets are expecting 25. I think now slowly the betting is started for a 50 basis point. I expect it will be 50 basis points, which no other analyst is talking of at this point of time. So let's see what happens in September, whether we'll get a 50 basis points or you could get 225 basis, that is 25 basis points in somewhere in August end and then another 25 basis points in September. But I expect that by September meeting, we will have a 50 basis point reduction, which means it will be good for emerging markets like India. It is not a great sign when interest rates are cut. Many times when interest rates are cut, the markets have flared up for some time and then they have collapsed, which happened in 2007, for instance. Interest rates got cut by about 50 basis points in September. Markets topped out 3 weeks later in the US. We went on till another 4 months. We topped out in January of 2008. So again, keep that in perspective. The final one is we talked of Japan, we talked of Israel, we talked of yields, and the final one is oil. Now, oil has been on a steady downtrend. Should there have been a Gulf crisis, oil should have shot up, which it has not done to the extent which happened on April 19th. Just check what happened on April 19th. All these Jiyo assets, they really moved. That did not happen. That does not happen in oil. So I don't think anything will happen. In fact, oil, if there is a recession, the oil prices will come down, which is again good for India. So if people say India is decoupled, this could be a sign of decoupling for some time. Nothing is decoupled forever. There are times when there are countries like India which get decoupled for some time. This could be one of those times. So now circling back to where we are. Okay, on Friday, for instance, both the amateurs and the professionals thought on the same lines. I keep talking that the amateurs open the market, the professionals close the market. So usually what used to happen, the market used to open with a gap down and the market used to get bought on all dips and close higher than the open. On Friday, it did not happen that way, though Bank Nifty did very well. It went into positive territory at one point of time, but it closed lower, though it didn't break the opening low. So one can look at it as a cause of concern. So one may expect that tomorrow we will have a gap opening down, but I won't be surprised if we close higher than the open, at least higher than the low. This is, and especially in Bank Nifty. Now, why am I talking about Bank Nifty? Bank Nifty has topped out in August. September is when, topped out in July. In August, we got the Nifty topping out a couple of days early. So if you look at it, Nifty looks stronger than Bank Nifty. But my analysis suggests that Bank Nifty is more resilient than Nifty. So the next rally, whenever it begins, whether it begins on Monday or begins some other time, or as the doomsdayer says, there is no rally, it is only going to go down. I disagree with that based on whatever understanding I have today. If there is some fresh news comes, then we have to change our mind. So as I keep saying, we should never sell out of fear. We should never sell out of fear, but we should never fear to sell. We should never fear to sell if there is some change in the atmosphere and change in the fundamentals or the technicals. As we are speaking today, I do not see any change, either fundamentals or technicals, especially as far as Bank Nifty is concerned. I have no hesitation in selling, but I'm not in the mood to sell unless data tells me. I have been mentioning that 24,200 below for 2 days will make me change my mind from bullish to cautious to bearish. So I have not seen that. Maybe we'll see it. As the doomsdayer say, it will happen. It will fall below 24,000 next week. I don't know. Let the events tell us. Let the prices tell us. As we speak now, I don't want to fear. I have no fear at all. I'm observing it 24 by 7. That is on all my waking hours. Now, why Bank Nifty? So let me just share a chart with you, which is very fascinating, which I found very fascinating. Okay, so where is the chart? Let's see whether I got this chart here. Yeah. Okay, look at this chart. This is the chart. This is the one in red. The line in red is the price, Bank Nifty price. The one in green, or it may show us dark, but black, but it's actually green, dark green, is the P ratio. Now, Bank Nifty P ratio, I have taken it, for instance, if you take it for 1 year, last 1 year, you see Bank Nifty P ratio, excepting for the June 4th date, it is trading lower. P ratio. See, we talk about P ratio as one indicator to know whether the market is overbought or oversold. If you look at it, P ratio has been continuously coming down from around 16 and odd. It had gone to about 16.2. Right now, it is below 15 as we speak. On Friday evening, it is below 15. If you take on a 1 year basis, it is almost at the 1 year low. It is at a 1 year low, excepting for that aberration on June 4th. Now, we look at 5 year. In a 5 year, it's almost at a 5 year low. So, Bank Nifty is cheapest in the last 5 years based on P ratio. Let's look at another one, which is the price to book. You see price to book. Price to book, it is not very expensive. It is there. It is middling. It is not higher. In fact, the price to book was high in July 20th of 2023 when price to book was 3.24. Right now, it is about 2.9. So price to book has been above 3.2 for a long time, many times. If you see here, see here, and we are sitting here at 2.9. The lowest, of course, was in 2023 in October when it came down to 2.54. So if you look at P by B, it is middling. It is not expensive. P ratio is 5 year low. Now tell me, on what basis can I talk about Bank Nifty? You may not be able to see the latest one because my face is there, but you can have a look at it. You can just Google, but I can tell you it is at 14.9, which is the lowest in last 5 years, excepting for that June 4th for brief while. Otherwise, it's been almost at the low. So how can one be bearish with this kind of a number? How can one be bearish? I really don't know. I don't want to be. Now also look at what is happening in, say, HDFC Bank. I will just share with you what I've seen in HDFC Bank, for instance. See here. This is the biggest bank. Now, this share, the price has been coming down. The rally went up here because there was this news that HDFC Bank will be included in the MSCI index. So it went up. It went up from around, you can say around 1680 to around 1794, 100 and odd points. It went up in 3 days' time. Then it has collapsed. Now it has again come back to around 1659. You see this, if you see the pattern, it looks like a saucer pattern, which is generally a consolidation pattern. Now, please note, nothing has changed as far as MSCI index inclusion for HDFC. Now, when will we get that announcement? August 13th. Today we are on August 4th. So on August 13th, which is Tuesday, you will get to know whether it will get included. It will certainly get included as far as the calculations are concerned. So then what should happen to this? I believe that we will see higher prices than what we saw yesterday. I am bullish on HDFC Bank. Now, you look at IndusInd Bank. Okay. Now, IndusInd Bank has been beaten so badly that, there is very little downside in that, is my assumption. Then let's take ICICI Bank. ICICI Bank is one of the strongest scripts in Bank Nifty. It is done very well. Then take Axis Bank. Axis Bank got beaten because of poor results. Now, in the market, we will discount the future. the MD of ICICI Bank, sorry, Axis Bank came on CNBC and said, "We have crossed the hump. We are now turning around." So if Axis Bank turns around, Axis Bank is much lower than what it was at 1340 was the high. We are now sitting at around 1160. So if bank after bank, you take Bandhan Bank reported very good results. The management has changed. So this pattern is a very interesting pattern called the flag pattern. So if you really go and look, you will see Kotak Bank is another one. Kotak Bank has reported good results, but if you see Kotak Bank has gone nowhere for the last 3-4 years. So what is the downside one can expect with a company like with a bank like Kotak Bank, which has done very well, and why should it fall further? Now, nothing is impossible in the markets. Market can fall further if there is bad news all around. It can, but I would be very careful in just going fully bearish tomorrow. I would go caution. I would go with slightly a bullish bias, and I would like to observe and then take action, suitable action. If the markets change their trend, I will also change. Till then, I am bullish. Thank you for joining. Today is slightly a longer one, but I hope you enjoyed what I said. This is Vijay here, signing off. Thank you and have a good night.